Are you buying a house? That's amazing. But signing that offer is kind of terrifying, right? It feels so final. But what if I told you there are hidden escape hatches built right into that contract? They're called contingencies, and understanding them is the difference between moving forward confidently or potentially getting stuck in a bad deal and maybe even losing your deposit. They are specific conditions in your purchase agreement that need to be met for the deal to proceed. Now, if they're not met, you usually get your deposit back. Today, we're unlocking the big 4 essential contingencies every California homebuyer must know, plus some bonus contingencies many people overlook, even agents. So first, let's break down the big 4 safety nets typically found in the California Residential Purchase Agreement, the RPA. Number 1 is the inspection contingency. This is arguably your most powerful escape hatch. The standard California contract gives you a default period, often 17 days, but always check your contract. It's negotiable. It can be done in 5 to 10 days to investigate the property inside and out. This means hiring professionals for a general home inspection, let's say roof, foundation, plumbing, electrical, etc. Pest inspection, usually termites in LA, and maybe specialized inspections like septic tanks, chimney checks, roof certifications, etc. But here is the key. If you discover anything during this period that you're not comfortable with, from a major structural problem down to discovering the neighbor's dog barks non-stop, you have the right to ask the seller for repairs or credits using a request for repairs form. Credits are usually better for both seller and the buyer. Or if you can't reach an agreement or simply decide it's too much, let's say the barking dog, cancel the contract and get your deposit back. But remember that time frame. You must actively remove this contingency in writing, request for repairs, or cancel by the deadline. If you delay, the seller might issue a notice to buyer to perform, giving you just a couple of days to make a decision. Now, number 2 is the loan contingency. This is the funding check. Unless you're paying all cash, this one is crucial. It protects you if, despite your best efforts, your mortgage financing doesn't come through. Again, the default is often 17 days, but it's negotiable. During this time, your lender is doing the deep dive, basically verifying income, checking credit, and going through the full underwriting process. That pre-approval letter in the beginning, it's a great start, but it's not a final loan commitment. Now, the crucial point that many miss here is that it's not just you getting approved. The property itself has to qualify for the specific loan program as well. If the loan specified in your contract falls through for reasons generally outside your control, this contingency lets you cancel safely. Removing it means you're confident your funding is locked. So be sure before you sign that removal. Number 3 is the appraisal contingency. This is the value verification. This is tied to your loan, but is a separate safety net in California. Your lender needs to ensure that the house is actually worth what you agreed to pay. They'll order an appraisal. If the appraisal comes in lower than the purchase price, you have options thanks to this contingency. You can cancel the deal, you can try to negotiate the price with the seller again, or you can decide to pay the difference in cash. Here's the pro tip. Removing your loan contingency does not automatically remove your appraisal contingency. They're independent from each other. You need to remove the appraisal contingency separately. In hot markets, waiving this can make an offer tempting to sellers, but it's a huge risk if you don't have extra cash ready to bridge a potential appraisal gap. Now, the number 4 contingency is the insurance contingency. This is the coverage guarantee. Pay attention to this one, especially in California. This gives you the right to cancel if you can't secure homeowner's insurance for the property that's acceptable to you, both in coverage and costs. With issues like wildfire risk, some homes are becoming very difficult or extremely expensive to insure. Now, the standard 17 days gives you more than enough time to get quotes from different insurance carriers, confirm they'll actually write a policy for that specific address, and make sure that the premium fits your budget. Here is the action item. Start researching insurance immediately after your offer is accepted. Don't wait. This contingency has become a critical exit point for buyers discovering unexpected insurance hurdles. So keep that in mind. All right, now, beyond the big four, your California contract has some bonus escape hatches that you should know about. Number one is title review. You get to review the preliminary title report. This shows who legally owns the property and lists things like recorded liens, money owed, easements, rights others have to use your land, or restrictions. If you find something unexpected or unacceptable, this contingency lets you back out. The second one is the HOA document review. If you're buying in a condo complex or community with a homeowners association, you'll get a stack of documents this thick, which includes rules, budgets, meeting minutes, restrictions, and they're known to be CC&Rs. This contingency gives you time to read them, and yes, maybe hundreds of pages, and decide if you can live with their rules and financial health. If not, you can cancel. Now, the third contingency here is the seller document review. Sellers must provide disclosures like the transfer disclosure statement, TDS, natural hazard disclosure, NHD, and maybe a seller property questionnaire, SPQ. This contingency ensures you receive and have time to review these important documents about the property's known conditions and potential hazards. Now, if you found something concerning, you guessed it, that's potentially an exit. Now, the last bonus contingency is leased liened items review. Does the home have solar panels that are leased, a water softener system under contract, or maybe a PACE or HERO loan attached for past energy improvements? This hidden gem contingency lets you review the terms of those agreements and decide if you're willing and able to assume them. If not, you can cancel. So how does this all work in practice? That's simple. Timeframes are key. Check paragraph 3L in your contract for the specific deadlines. Defaults are often 17 days, but they're negotiable. During this period, investigate, get your inspections, work with your lender, review documents, and act before the deadline. If you're happy, you formally remove the contingency in writing using a contingency removal form. And if you're not happy, you either try to negotiate with the seller using a request for repair form, or cancel the contract in writing using a cancellation form based on the specific contingency. Now, removing contingencies is a big deal. It means you're giving up that specific escape hatch. Your deposit becomes hard, meaning much harder to get back if you try to cancel later. Only remove a contingency when you're 100% satisfied and ready. And I know keeping track of all these different deadlines, 17 days for this, 5 days after receiving that, it can feel like juggling chainsaws while riding a unicycle. To make it way easier, I've put together a free California contingency cheat sheet PDF just for you guys. It summarizes all the key contingencies we covered and gives you a simple chart to plug in your acceptance dates and help track your deadlines. It's super helpful for staying organized. You can grab it completely free using the link right down in the description below. And most importantly, respect the deadlines. Don't feel pressured either. Talk to your real estate agent. They are your guide through this process. It'll really help you stay on track. And of course, if you're looking to buy or sell here in the Los Angeles area, my contact info is also down below. If you found this escape plan helpful, hit that like button and subscribe for more clear, simple real estate advice. Got contingency questions? Drop them in the comments below. Now, thanks for watching. Happy house hunting, and I'll see you in the next video.